While most of the nation saw little occupancy growth in first quarter, Indianapolis was an exception, seeing some decent growth, and it's about time. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Indianapolis update. Let's jump right into it, looking at some occupancy numbers. Take a look at this chart showing occupancy rates in Indianapolis versus the Midwest region overall. And as you can see, Indy has consistently trailed the regional norms even prior to the recession, but its pattern has pretty closely followed the Midwest. Occupancy in Indy fell as low as 90% during the recession. The metro had a real strong first quarter 2010, and then not much growth again until first quarter 2011, when occupancy improved 0.7 points. So there's something special about first quarters in Indianapolis. In fact, as you can see on this chart, Indianapolis also saw a spike back in first quarter 2009, so 3 years in a row with solid growth in the first quarter. And we drill deeper into the data, we see all of that growth in first quarter came in two product age categories: apartments built prior to the 1970 and also apartments built in the 1990s, although occupancy rates do remain strongest at the top end of the market, which is a trend we're seeing across most metros that are still in the recovery mode. Let's take a look at rents. The good news is that we've seen quarterly rent growth in each of the past 4 quarters. The not so good news is that all of those rent growth performances have been really mild. So annually, same-store rents climbed just 1.5% in the year ending March 2011. That is well below the Midwest regional average of 3.6%, and it's actually the very lowest rent growth figure among the 10 core Midwest metros. The range elsewhere was 2% in Kansas City to 5% in Minneapolis-St. Paul. And as we see on the occupancy side, same story on the rent side in terms of performance by age category. Year-over-year rent growth of around 3% in apartments built in the 1990s and 2000s, and modest rent growth of 1% or less in the older product age groups. So on a whole, Indianapolis is a market that looks more like some of those recovering metros in the South than it does some of the Midwest markets in terms of its apartment market performance, with solid numbers at the top end of the market, but still a lot of struggle in older apartments. In order to see a recovery in those apartments, it's going to take sustained job growth. Indianapolis is a market that has seen some layoffs in the government sector and also just saw some pretty big layoffs in the public school system as well. But the good news is that the private sector is adding jobs again, so it shouldn't be too long before we start to see some good growth in the bottom tier of the market in Indianapolis. That wraps us up for Indy. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.